Uh, Zay, I sent you a co-host invite if you got it. You got it?
What's good, my guy?
Just bear with me, man. Sorry for this late Sunday call on my end, bro.
You said late?
I mean, like late notice in it. I asked yesterday if you can join on this call.
Oh, yeah. You good? You good?
Yeah. I'm just gonna mention a few things about the forex market, and then we'll move on to the indexes, and then we'll lead from American markets from there. Okay.
All right, sounds good. I'm gonna go on mute.
Okay. Okay. Uh, good afternoon, good evening, good morning, wherever you are, everyone. I just wanted to talk about what's happened in the markets the last few months, and I just wanted to highlight a few things. So, from the last event that we had, as crazy as it sounds, we finally got to these levels that we were talking about, but this is only like halfway there. You know, Dixie dollar is almost at 100. Indexes are back at all-time highs. I think in April, when this actually a few weeks ago when they started dropping, a lot of people got scared. I've never received so many messages from people, and I found that many people in here are also stock investors. So a lot of stock traders also that were holding stocks. So I had to try to reassure people, and it's the media just run wild with it and things like that, you know. But I just wanted to highlight things. If you guys saw Jackson Hole's event when Jerome Powell was talking, I think he was. Everyone knew that it was like the Fed was declaring victory, if that makes sense, you know. So as far as what happens to the markets now that interest rates are zero, I don't know if many of you started trading in 2020 or if you guys started trading recently, but just before COVID-19 happened, U.S. interest rates were at 0%, I think, or 1.5%. What happens to the market in a low interest rate environment, especially in forex. I'm going to explain to you guys the fundamental drivers of currencies around the world and currency pairs. It is the marginal change in future expectation, real interest rates of country A versus country B. Now, if I just pin something on the nest, if I can do that for you guys, let me just find it. Let me get it. Post something. Now, when everybody trades Forex, 1 minute, real interest rates, expectations, 1 year from now. Sorry, 1 year from now. So, when most people trade Forex, they, you guys are looking at seasonal data and things like that, but most people don't pay attention to what real interest rates are. How do you calculate what real interest are? Some people think it's the current interest rates that American interest rates at the moment are 5.5%, but when it comes to money, they don't look at it like that. To calculate real interest rate, you need to take the 2 year bonds minus the current inflation number, which is PCE. So did I put it on the nest? I think I put it on the nest. So let me just put it on the nest. Post shared. Okay, there you go. I think you should be able to see it now. Can you see it now? Yeah. So basically, how interest rates work is to calculate them, you need to calculate the 2 year bonds minus the current inflation. In America, the inflation number is calculated through PCE, which gives you what is known as 1 year real interest rates. Now, the thing is, people buy bonds or they buy currencies. I'm talking about a large amount of money. I'm talking about pension funds, teachers funds, or as we know them as the commercials, or it can also be Saudi investment funds and things like that. You know, for example, Saudi Arabia's public investment fund, which is 925 billion, is starting to do international investments. They don't really do as much, but they started to do. They're looking to buy. They already own government bonds, U.S. Treasuries, and things like that. But they're also looking to buy up companies. So now it's a race between. I think it was Financial Times that recorded this story the other day. I was reading, but anyway, the point is this: is that you need to start comparing what is the real interest rate by taking the European Union, for example, their 2 year minus the inflation. And America, if you trade Euro USD, remember what you are trading seeks value. These algorithms that ICT talks about, they look at it in terms of the weekly chart. And this weekly chart is seeking value. Now, I told you guys before, I think most people know by now that the market moves 6 months ahead. What you are trading now is people putting their money into these currencies, trying to make money in 6 months return. Now, the way these people move the market is 6 months at a time. Now the question is, which country is going to cut interest rates, and for what reason? Is the Federal Reserve going to be aggressive with interest rate cuts? I think they will, in my opinion, because they were the first to raise interest rates every month, 100 basis points, 50 basis points, and towards the end they started doing 25, 25. So I don't think the European Union needs to cut, nor does the UK or any other country. So when you start comparing real interest rates, what we're talking about, I'll also send you Federal Reserve of Cleveland, their real interest rates, how it looks like. At the moment, the United States real interest rate is 2.69%. It's 5.5, what most people think. Let me just post it here. Okay, uh, real USA interest rates expected. How do I post the picture? Where's the picture of? There it is. Post, and then let me go back to the chat. Put on the. How do I do this thing? Sorry, guys. I'm just trying to make you understand. So you should be able to see second picture, real interest rate expectations. So any investor, any hedge fund, sovereign wealth fund, teachers fund, school funds, police funds, pension funds, state funds, government entities, different countries, Bank of Japan, central banks, they start to move a lot of money around to try to gain value. There was a time in early 2020 where real interest rates was minus. So basically you guys remember the great bull market of 2020 in cryptocurrency, right? So assets that have a definitive value like Bitcoin and gold, they benefit from negative interest rates, not positive interest rates, if that makes sense. I'll give you guys a picture of how the United States looked like 2 years ago, wait, 3 years ago, sorry, 3 years ago. USA, USA real interest rates. I think it was -6, if I'm right. So yeah, it was -6, and then inflation started going up. So and then interest rates became positive. So when I was saying when I say things like Dixie dollar is bearish, I'm not basing it on a technical side. I'm trying to base it on how the chart would develop. Like the thing about fundamentals that most people don't understand is this is these things are the move before the move. So before the candle even prints, what is causing the candle to print money, right? People are investing billions of dollars. I'm talking about large amounts of money, and how the hedge fund managers or the commercials, the people who control the market, who decide the direction of the market, how they view things. Also, ICT used to say this funny thing is if you're in line with the commercials, you will see the difference between a trade that is done in line with real smart money, which is them, compared to what anyone else thinks, just who's looking at the trend or anything like that. Let me just post it on here for you guys. So when I was telling people that Dixie Dollar would get to around 100, these levels, it was not something that I saw. And I saw this like 6 months ago happening, And I get it. Back in January, people, the usual trolls and things like that. But in January, we saw normally every January and every August, it's not the commercials or non-commercials. If you look at the cut reports, they're not taking part. It's actually the large retail traders that people don't respect, but you have to give them a level of respect because you need to have more than $2 million to show up on the court report. So I don't think these people are amateurs, although they lose a lot, but they must have a legitimate broker in in the futures market. When they get to a certain amount, they are told like from now on you can only do limit orders, you can't do market orders. So most people don't know that, but That's what they do. So what happened is you had a situation where always in January the bullish move we saw in Dixie dollar in January was caused by large retail, and normally January is to do with tax season. I think in the United States, so December and January large retail start to get involved, and companies are sorting out their moving allocations, their investments all over the place. So you have a situation where they're not interested in dollar; they need to sort out their taxes. So therefore, the large retail traders decide where the market goes, especially in Dixie dollar. So I wasn't concerned about the bullish move because I knew when the big guys step in, they will start their 6 month program and things like that. So although yes, I do believe maybe in sorry, I do believe maybe in September there will be some resurgence, but as far as when you guys are trading forex, you guys should calculate Euro USD, the European Union real interest rates that is expected to happen 6 months to 1 year from now. All you need to do is find the 2 year European government bonds, and take away the CPI number for Europe. In America, you need to find the 2 year government bonds, take away the PCE number, and that gives you real interest rates. And that's how this market trades, you know. I will speak to Jay and Zay. Your comments on the US markets and what is going to happen in September, and what is your opinions on Jerome Powell? And I think we have a disagreement on this. I think I say 50 basis points, but I'll tell you the reasons why. Although it's not going to be a positive factor for indexes, but you go first, but I'll let you speak.
Cool, cool. What's going on, my guy? First of all, I appreciate you for inviting me up here. Just to say a few things. Every time we get together, it's always pretty good, man. But yeah, I'll just share. I'll answer your question as far as what's my thoughts when it comes to September and Chair Powell. So, starting with Chair Powell. For me, it went as expected. He was dovish. I think he's been telegraphing a lot of what he's going to do all year. So I think it was probably a while back when we talked about this, but after the first quarter, and he expressed, "Hey, I don't have, we don't need, we don't have confidence to do the rate cuts." At that time, I was like, okay, he's probably going to wait. He's going to need to get data over the summer. They want to see inflation get back on track. And I think at that time I was like, okay, maybe June is when we could see a rate cut, but I wasn't too sure because, I figured they might not have enough data. But now, that we went through the summer, everything is it seems back on track with inflation. That narrative is kind of dead. I mean, like I said, or at least like I told my people, listen, I don't, when it comes to this Jackson Hole speech, I think a lot of people have high expectations, but if you listen to what Powell said in the July FOMC, and just when he normally talks, he's been telegraphing like, "Hey, we're getting closer. We're getting closer." It may not be as close as what people wanted, but in the last FOMC, he basically said, "Hey, listen, if September is good, it seems like rate cuts are on track." That was the biggest headline that I got away from that. So when it came to the Jackson Hole speech, I think he delivered, right? He addressed the weakness in the labor market. He specifically stated, "Hey, we do not want to see more weakening," right? So the Fed is going to try to support their dual mandate, which is the labor market as well as keeping prices stable. When you think about inflation and price stability, a lot of people think that prices need to go back down, or how they were pre-pandemic. That's not the case, right? If at the end of the day, we had a big increase in prices, and if you think about from the time prices increased to where we are now, they've actually been pretty stable. I mean, gas has been in this $3 range since about 2020. All the groceries have went up since 2020, but I mean, my grocery bill hasn't truly increased since then. I mean, we had that initial increase, but from there it's been relatively stable. So when you think about inflation, it's that prices have just stopped going up. That's really the biggest thing, is that now we're not seeing those big increases no more like we saw when the pandemic stopped and everything went back rocking. So inflation is kind of, on that path back to 2% or whatever, basically saying prices aren't going to go up. And so, yeah, when it comes to the rate cut, as far as what he said, he didn't say whether they're going to do a 50 bips or 0.25 or 25 bips. You're right. I think, in my opinion, I think they start out with 25 bips, just to get the ball rolling. If something dire happens, between say now and the end of the year, then maybe we can get the another 25 or 50 bips. But I think the same way they were slow to start raising rates, they'll be slow to cut rates, right? Because my thought is this: as soon as he cuts rates, best believe the fear mongers and those bearish folks, they're going to start talking about, well, inflation is going to come back, right? So once he does this first rate cut, we'll have to deal with a little bit of that. I do think that when he does that first rate cut, in my opinion, I think the housing market is set to go crazy because there's so much demand on the sidelines for people who are waiting for rates to come down to actually buy, that when he starts to cut rates, we're going to see housing competition probably pick back up like it was back in 2020. So, for those who think a housing crash is coming, personally, I don't see it. I could be wrong, but in my opinion, with the amount of people I know as far as millennials, Gen Zs that's trying to buy houses and that's been patient, as soon as we get those rate cuts, it's going to be a frenzy. As far as the market goes, I I'm in my contrarian mode a little bit here when it comes to September. So, August was, it started off a little shaky, but now we came back booming. And ever since that August 5th low, I mean, the market has just been on a tear. I think coming into this week, we have, I don't even think PCE is going to be really a factor. It really comes down to NVIDIA earnings on Wednesday and what they do. I think it'll be another blowout quarter, but any little blemish or slip up, you might see a little pullback or whatever. But at the end of the week, I think this could be a very bullish week, which will kind of set up that feeling of, okay, we had basically a 10% pullback in the beginning of August, and the market has basically ate that up. So, a lot of bulls are going to be feeling really invincible. I think people will be thinking that they missed out if they didn't buy that low. And I gotta be honest, I feel like it's a little bit of a bull trap coming because
Yeah.
September we will have to deal with a little bit of election uncertainty. If anybody paid attention to the news this weekend, you got the Middle East situation heating back up again. You had Hezbollah attacked Israel. Israel attacked Hezbollah back. So, that thing is going to pick back up. And because of the presidential race, that's going to be the perfect little excuse to, and let me not say a little excuse, because I have a friend in the intelligence community, and that stuff that's going on in the Middle East, it is real. Like it's real beef. It really lead to some big things. But when I think about manipulation and just media and the narrative and how it goes, I think it will be contained to the Middle East. But you know, emotions, people will make it more than what it is, and it gets people all riled up and things like that. So but yeah, we'll have to deal with the election uncertainty. You have to deal with a little bit of this Middle East stuff picking back up. And who knows, they might even try to bring, that Japan carry trade stuff back up to kind of, again, stir people's emotions, get people fearful a little bit. Um, but yeah, I do think that September and going into October could be a little bumpy because the catalysts that are going to actually carry us into the end of the year, which would be earnings season, which doesn't start again until probably about October. If we're going to get another rate cut, that would happen in November, as well as just having certainty around who's going to be the next U.S. president. All of that stuff won't come until about mid-October, November. So going into this period where we don't have an earnings season, we won't have any real catalyst that could essentially push the market up. It brings me to a point of where could we run into that good old saying that everything is priced in? If that is the case, what I've been saying is watch out this Friday when we get a good PCE number. If the market sells off on that good PCE number, I promise you will hear the narrative. Everything's priced in, and then we may have a little bit of a pullback in September. We'll have to deal with some macro stuff because that's really the only thing that's going to be popping off when it comes to September. Is we'll have an FOMC meeting. That's probably going to be a dud. We know we're getting a rate cut. What more can he say? You'll have to deal with getting labor market data early in the month. We'll have to deal with inflation, but that's really it as far as market drivers. You got quad witching. in the middle of September. So, that's where I'm at. It was a remarkable August, a remarkable summer. I think that a lot of things have been going pretty well. We are pushing some levels that I didn't even believe we would get to the end of the year. So my expectations have changed a little bit. I do think we end the year much higher than expected, but it's gonna be a little bit of a bumpy road probably over this next month and a half. But once we get past that election, some of that stuff, man, the end of the year is it's gonna be crazy. It'll be rocking. That's all I can say, yo. But yeah, Yusuf, that's pretty much where my head is, man. That's things that I kind of see in my thoughts and the data that I'll put together.
Uh, I agree with you, bro. On my side, we're following the seasonal chart for the election year cycle, and it shows a big drop in September. So, although indexes, the rate cut will not actually benefit the big companies because of they've already done well with high interest rates, right? So, what difference is rate cuts going to do for them? It's more of a the Russell 2000 is where the big companies are targeting. I mean, big investors are going for the Russell 2000, and that hasn't broken out of its all-time high for 3 years, right? So that's the one that to keep an eye on. And I was surprised when the whole rotation thing happened with CPI last month, and I did not see that move coming, bro. The way Nasdaq dropped and S&P 5, I said, "What the hell is going on?" You know, it made no sense. But now I get it now. Like the whole rotation thing. That's the first time you learn something new every day in these markets, right? So also the issue with September. September is usually a month where a lot of asset relocations and things happen, right? It's technically, as far as indexes are concerned, they always recover their losses. It's not an issue. We've seen Nasdaq do 1,000 points a week, so they can recover all their losses in 1 month if they wanted to. They've done it in 2 weeks already, so they dropped for 2 weeks, recovered in 2 weeks. So it's not a big deal. As far as I just wanted to advise the forex traders. There's real opportunities in these markets. A lot of money is coming to this market, but it will take a month, and we'll see big positions in the cut reports happening as well. Uh, there is a concern though regarding the carry trade. It's the Central Bank of Japan. I don't know if you guys. I follow Governor Ueda a lot, and I was watching his hearing before when they called him up to the lower houses of Congress, and he defended himself. He said, "Listen, yeah, unless you're going to remove me, my job is to remain price stability and wages. That's Japan's issue." And he said to them that we will raise rates if we have to. Do you understand? And I've never seen anyone speak like that. And I feel obviously Japan. Like I watch a lot of Japanese things, and I was uh, like, you have to have a pride issue in Japan, right? So he stood up to them, and they were all shocked that he said that. He only takes his mandate from the Ministry of Finance, and Ministry of Finance and the Central Bank of Japan are good together. He doesn't take his mandate from Congress. Only Congress would have to advise the finance minister, and it works. There's a lot of politics in how they do things over there. So he spoke to the lower house and the upper house, and we saw already USD JPY, a lot of money, a lot. I'm talking about billions and billions of dollars is going into the JPY currency. And I was looking at CME Group. They have something called notional volume. The JPY currency is for the first time this year number 2 after Euro USD. And when I saw that, I said, "Yep, JPY is going to the moon for its own reasons." But inflation in Japan also went up the other day. It went up like a big surprise. It jumped 0.3% or something like that. So that's another excuse for them. But as far as markets are concerned, you're right. There's a lot of instability in the Middle East. There's only earnings seasons help indexes, right? The stocks. But as far as investments are concerned, the money we are talking about, money managers, their money is not going to come anytime soon. It will take a month for them not to bring that money over because they have to sell. Guys, can you please stop requesting? I have to keep removing people. We haven't even said questions yet. But anyway, uh, as far as money managers are concerned, money managers are people who manage rich people's money, if that makes sense. And they have the famous 60/40 allocation that they have. 60% in bonds, 40% in stock. Stocks. So
Equities. Hmm.
equities, yeah, they can flip it around if they wanted to, you know. But the
Hmm.
point is, so going forward, the month of September is going to be action packed in forex, but not so action packed in index. So anyone who has the skill to, you should concentrate more on different markets, because forex markets move really fast, and is their time to shine, if that makes sense. Because, but as far as indexes are concerned, it's going to be a bit of sideways action for now, and until that.
Hey, Yusuf, real quick. I got two
Yeah,
questions real quick.
yeah,
Number one, you talked about the Japan thing a little
yeah.
bit, and I definitely defer to you here because you're more versed in international. So you do believe that carry trade, there's more of that to come, or more of that to be played out. Like do you see that being over?
I do, but not in that sense. In the
Okay.
sense where, uh, because real interest rates are going down, bro,
Hmm.
they're not gonna ditch Dixie dollar completely, right? Because
Right. Right.
they can just buy the 5 year note, and long term 5 year inflation is like 2.9% or something like that. But the point is that, as far as the carry trade is concerned,
Hmm.
the central bank of Japan won't allow it to happen, but he will raise interest rates. Does that make sense? You know, do you get
Yeah.
it?
Yep.
So,
Yep.
so
Yep.
he's not gonna protect the market. Let me. I swear to God, every time random people. You know, if you request, I'm gonna block you. If you request to speak and we haven't our open, I'm gonna block you straight away. They always have this. You know, like there's people that see Twitter
No, they
space.
want to come up here and they
No,
want
bro,
to
this is the
debate,
random.
man.
They don't follow me or you. Some random accounts just trying to show up to request. You know, do you get it? Me, I
Listen,
block every single one of them if they
I
request.
know. I was gonna say real quick, just off topic. I give you
Yeah.
much respect because you really, you call out the trolls and stuff, man. I don't got time for it, but you know it's
No,
gonna
you know what it is, bro. Yeah, look, I just want to clarify something. First of all, I'm not a bully, everyone. Yeah. Second of all, there's a lot of shady shit going on in this industry. You know,
happen.
like, please help me understand. How does someone make $1 million and start charging $65 a month? It doesn't make sense, bro. You know. So if I explain the whole con, you guys will think I'm a hater. So I just keep quiet. You know. So I let people do their own thing. And that whole debate with some of these traders, sometimes I get dragged into things. You know, and
Yep.
someone asked me for my opinion. I said, "What do you think?" You know, really, you know,
Right.
and then they all go all out attacking on me and things. It doesn't make sense. But the point being is this, guys. I'll say it first, and I tell everyone, trading is very, very hard. It's a lot more than technical, a lot more than fundamentals, a lot more than psychology. Sometimes you're in a trade, and the market turns on you, and you say to yourself, "Why did you not take profit?" Does that make sense? I'll give you an example. Yeah, Friday I went long Nasdaq after the drop, and then I was up 3,800 on top. I didn't close the trade. I was going for glory, you know, do you understand? Then I realized, I looked at the Russell 2000, that thing is flying. I said, oh, hell no. Rate cuts is better for Russell 2000. This index is going to drop. 3,800 turned into 2,100, bro. I closed the trade. Does that make sense, bro? When I realized
Yeah,
what
it
was
happens.
happening, that Nasdaq and S&P 500 were not going. So now the first thing I look at when it comes to all matters, interest rates and CPI and things like that, I have the Russell 2000. You know how everyone has the ranking on their trading view. I have
Hmm.
Russell 2000 just under Dixie Dollar now. Does that make sense? So I pay attention to that more. If the Russell behaves, they all have to follow the Russell. If they don't follow the Russell, I
Correct.
will trade the Russell. Do you understand? So I
Yep.
started doing that, and because the last time I got messed up with the whole that the rotation, I said, "What the fuck is this rotation?" Do you understand? What the hell are they talking about? You know, I said they got an excuse for everything, don't they? You know. But then I
Yep.
started listening to But no, the point is, yeah, on this app you have a lot of people who think they can insult you and say things. You know, do you understand? And most of them are
Hmm.
young kids,
Hmm.
live at their parents' house and things like that. You know, and I remember Elon Musk said when he first made Twitter, he said, "Freedom of speech is not freedom of reach." You know, and I give them instant block straight away. Do you get it? But sometimes it's as if what I say triggers some people, you know, because all of 2023 we have to fight the prop firm influencers. We warn people about companies, those companies collapse, and now it's about who's the best trader, who's this, who's that, you know. So the point is, I just try to keep it economical, macroeconomics and trading and stuff like that. I try help. I even try to sometimes I don't. I'm not giving signals per se. I just give commentary on the markets as the day is developing, you know, just what I'm thinking, and it does help people to understand what the data means and things like that, you know. But it has reached a stage, bro, in terms of fundamentals and technicals. There's no competition, bro. I don't need to compete with anyone. Do you get it? What we said was going to happen always ends up happening anyway. So it doesn't matter. Let everyone think. Also, there's another issue. I might know all of these things, but did I trade it in this way? I know all these things, but I didn't trade in that way. For example, like last year, I knew Nvidia would hit 1,300, and I knew they would do a stock split because they wanted to have more money coming in, more people buying it. And but did I buy Nvidia? No, I honestly did not. That was the one regret of when it comes to stocks. I didn't buy Nvidia. What even though I knew it was going to do that was going to happen. So it's one thing knowing all these things. It's another. It's a completely different story trading it. And sometimes I think to myself, I should just be a wealth management and tell people what to buy, and I take a fee from it.
Facts.
Don't you think that would be such a cool job, bro? If you
Yeah,
invest and
but
manage it. Yeah, so
and it-
but the only way to do that is you would have to work for them, and I would have to have a boss, and they'll boss me around.
yeah, man,
Yeah,
it's a lot of BS that come with that. You can't talk as freely as you want if you
yeah,
go into that
this is
area. It's a
that.
lot of restrictions. I've had people
Yeah,
ask me to do that too. I'm like, I don't like all the restrictions. I want to
yeah,
be able to say what I want to say.
yeah, yeah, it's
um,
true.
but
Now,
I
also, even
let me
people they
ask
ask
you.
me like, look, I'll give you another example. What is about to happen now? Look, there's another one. He's not listening to me, bro. Anyway, what I was trying to say was, bro, was that as far as the market is concerned, it benefits gold and
Mhm.
cryptocurrencies. They're not going to be affected by the rate cut. If anything, is positive for them because assets that have a limited quantity benefit more in rate cut environments. So I did advise people buy up or every crypto, buy crypto if you want. That's my advice. But
Mhm.
this is once a year there is a turning point or like divergence. I mean, as in indexes go their separate ways. Bitcoin decouples from Nasdaq and goes its own way. Does that make sense? And
Yep.
that
And
moment
then
is happening now. Do you
my
understand?
bad, I ain't gonna cut you off. But the second question I have for you, you mentioned
Yeah,
about money managers moving money,
yeah,
right? Um, we both know that there's still like what 6 trillion on the sideline, something
yeah,
like that.
yeah.
So I just wanted to kind of big you up on that point of I think you nailed it with, September is going to be that rough month,
Yeah.
but I think that's going to be that opportunity for them. Like because you mentioned something, you said money managers got to take some time, they got to sell
It
stuff.
takes a
And
while.
what
Yeah,
better
it takes a
month?
while.
It's going to be like, what better month to do it in September when you're going to
Yeah,
have a bunch of noise going on? You're going to have people confused. But also, I remember earlier when me and you talked, you had mentioned how when that first rate come through, that's when people are going to really put money into the market. We're going to really see that bull market start up. And I agree
yeah.
because, I'm thinking in my head and I'm like, yo, okay, they might pull it back in September, but when that rate cut happened, that 6 point some odd up. Listen, all I know is that fourth quarter about to be
But it's
crazy.
going to be a crazy month, bro. The middle of October all the way to the end of December is going to be crazy
Gonna
for
be
the stock
crazy,
market.
yo.
But the thing is, for them not to do that, they need to start selling bonds now. Does that make sense? So it takes a while to go through clearing houses, and this is a lot of money we're talking about. And obviously, the clearing houses, Citadel, is not going to clear these bonds, or the Fed is not going to, because the Fed has a backlog, and priority is countries, their treasury, the treasuries, and things. So company, all these money managers, wealth management, all these funds, they come second. So there's a queue to clear these bonds and these things. Do you understand? And the Fed has a lot of reverse repo money, so they can clear it as much as they want. This selling of government bonds and treasuries will reduce the reverse repo to zero, if that makes sense. But if the reverse repo comes to zero, interest rates need to start going to zero also. This is a fundamental thing that people don't understand. As long as the reverse repo market still has some life in it, and every week they're buying 330 billion, how is this shit going to be reduced? We reduced reverse repo from 2.5 trillion, 2.2 trillion, now to 300 billion. There's still some life in it. So September is the month where everything reallocation happens. Does that make sense? The real reallocation. And
Yes,
but
sir.
also this reallocation benefits bonds, because if they're selling bonds, they're going to start buying foreign bonds, and to buy UK bonds you need to buy British pound. To buy European bonds you need to buy, because the money managers, people they will always have this 60-40 thing. Do you understand, bro? But if the 60%, which is safety for them, is no longer beneficial to do in the United States, they're going to start looking at other countries, UK, Canada, and things like that, and other countries. So for that reason, they're gonna start. They're still gonna refill their 60%, but that 40%, I'm talking about $2 trillion worth, and they're gonna split that 20% on Russell 2000. 80% on Nasdaq and S&P. Do you get it? So that's how they're going to view it, the market as. And but all of that before they move to stocks, they have to replenish their bonds. Their safety for them for their customers is first, and there's no safety in indexes for them at the moment. So until Jerome Powell gives the signal that he does the rate cut, and they want to know. They also want forward guidance by how much is the Fed going to cut. So right now they're going to position themselves in totally into the money managers are going to start selling bonds and they're going to stay in cash for September. And then after September, when they get clarity at the next FOMC, we're going to see after 15th of September, we're going to see some crazy price action in the markets.
I
Lots and
agree.
lots of money coming in. And that's what I was trying to tell people. Forex September is a good month to trade. If you're going to trade indexes, start looking at the Russell 2000 if you want good price action. NASDAQ and S&P 500 are going sideways. They're going to be in the doghouse, you know. As
Hey,
far as
listen.
yeah,
I'm gonna just say this, Yusuf. You that every what I say every time we get together is classic, bro. Because everybody who follows me, they know I've been a big fan of IWM and the small caps all year. So what you say is just got. I'm hyped. I can't, IWM gonna go crazy. I've been
you
calling
know
you
what it
for a
is there.
while. I've
Yeah,
been patient.
it's people
It's gonna go crazy.
people look at charts, but they don't understand who starts the move. Do you understand?
Right.
Somebody has to
Agreed.
start this
Agreed.
move. Why are you always entering on the third or fourth candle of third or fourth week? And to find how these people start the move, you need to start reading. Bro, I tell people if you can afford a Bloomberg membership or Financial Times membership, it's only going to cost you $50 a month. But that $50 a month, the articles every morning they say to me, "Good morning, Yusuf. This is what the market is doing today. Good, the close, the open, things like that." And I thought, yo, these people are such good customer service, but they talk about a lot of good things that are important. And I watched Ed Yardini's video. He's more of a long-term portfolio allocation person. He's bullish throughout the year. Then I started watching like every morning at 7 o'clock in the morning. I watch Bloomberg TV and I listen to the investment managers from different banks and what they come on and what they say. You know how much you learn just by watching Bloomberg TV. So much you learn. And as a trader, you need to start thinking you're going to make money in trading. Yes, that's cool. What do you do instead of giving that money back to the market? How would you invest this money? There's more to trading than just buying and selling things, you know. People are following these little kids with these all these little cash out certificates and things. That is not the definition of a real trader. A real trader is someone that has side investments, long term plays, and he's day and does day trading to make an income, but they position themselves as long term. And I say to people, if you applied for JP Morgan or HSBC or Barclays as a trader, what would you say to them? I trade Euro USD. They're gonna say, get the fuck out of here and close the door on you and tell you, get the hell out of here. Do you get it? So there's more to the markets than meets the eye, you know. And you cannot trade your way all the way to success. In my opinion, you need to also you need to start moving your money, allocating it in stocks and things like. I said to myself in 2023, October, I think it was October 25th. If I simply bought all these stocks, I wouldn't need to trade today. I swear to God, I would have flipped 30 grand to $150,000. And I knew which stocks were going to blow out. And I said to myself, I'm in the wrong industry. I need to just be an investor. Does that make sense? And sit on cash and let the cash do its own thing. You know, do you get it? So that it's crazy. But you know, in 2020, I remember when the Ukraine war started in 2022. What is the options trade? The one that is 1 year long. Mad investor. Let me get him on. He's on here. I just want to ask you. Is it 88 TLT or something like that? The one that to do with government bonds. What is it called, Zay?
Yeah, TLT.
Yeah, if someone bought 1 year long trade on options on TLTT, they would have been millionaire by now, bro. Does that make sense, bro? That was the perfect options to buy. Does that make sense? And
Mm-hmm.
you did the 1 year out one, the 1 year out
You
trade.
talking about like a leap?
Yeah, that one. If you did that, you would have been bang on the money, bro. Well, Jerome Powell would have, by the time your contract expires, interest rates are 5.5%, bro. That is
Listen, I'm gonna say
crazy.
this: you could still do it now, right?
Yeah,
Like
I know.
TLT is. Let me look at the chart real quick, just so I can get a price on it. I know it's still under 100. Yeah, it's at 98. And if we're going to go into a rate cutting campaign, say over the next 12 to 18 months, bro, TLT is going to about 120.
Yeah.
So you buy you a Leap engine, just chill.
Exactly. That's the best thing to do. You know, do you understand? But that's how I would do the opposite of the 2022 trade and be on the I would do puts on TLT. That's how you lot call it, right? So I will be on the put side of TLT going for, after September though. Let's find out what Jerome has to say first. So
Right.
because you know the old man might say we're data dependent, and I swear to God, I've never looked at data more in shock lately. Like I used to tell people, yeah, remember what we said back in April? Good data will be good data. No longer is bad data seen as good. If it's bad, you sell. If it's good, you buy. You know, does that make sense? So,
Hmm.
and luckily we spotted that trend change very early on, bro. You know, so and when the ISM numbers came out negative, easy 600 point sell on Nasdaq, bro. One of the best trades ever, you know. But anyway, guys, any questions? You can come forward and um, we'll answer your questions. If you have any questions, the call is recorded, by the way. If anyone wants to, you know,
Yeah, people going to ask if they can hear the call again. So,
yeah. I have my friend. Yes, bro. How are you? ICT concepts. Good to see you, Patrick, Louis, Cheese. Why they call
Richard,
you
can you
Cheese?
hear
But
me?
yeah, sorry, gun. Yeah, yes, bro. How are you?
How you doing, my guy?
I'm good, bro. How are you?
I'm well. I'm well. You know, I always come up and I love to talk about commodities, man.
Oh yeah.
When with rate cuts coming and a lot of risk on sentiment coming, I'm really liking soybeans and soybeans oil, the
Yeah.
derivative, long going into the end of the year. I like a lot of the meats as well. So like lean hogs, feeder cattle, live cattle. I'm really looking at a good position, trying to position myself well in those as well. They
Mm,
repriced aggressively. If you look
mm,
at the chart on, I believe it was lean. Was it? Yeah, I believe it was lean hogs. Well, they
yeah.
repriced aggressively, like literally, like almost $21 in like 2 days, and they just gapped down.
Yeah.
So we know that gap fill is coming eventually. And
Yeah.
on my side, I just wanted to let anybody in here know that does trade commodities to be aware that the energy sector. I'm not too sure about oil. I'm not too sure about natural gas, but I
ICT
am.
concepts is an expert in oil. ICT concept. I want to ask you a question. Sorry, bro, to cut you off.
No, you're all right.
Sorry, but I'm bullish. We're bullish on oil. I just want to get the oil expert ICT concepts. If you can get the invite.
Yeah, I love to hear because it's not looking pretty.
No, it's bullish because on the cut reports, the commercials have basically everybody is short oil, right? Or all three parties are short oil, but open interest keeps reducing, and whenever that happens, there's going to
Yeah.
be a squeeze. You
Yep.
know, does that make sense?
Mm-hmm. Yeah.
And
Yeah.
also,
Yeah.
What's
don't
up?
look,
yeah,
don't forget that they're going to use that Middle East tension. That
yeah,
they
exactly.
love
Yeah,
to
that's the best.
pump
You
oil
know
when
what? You know
when
what?
that
That's
comes.
what I wasn't factoring in that. He's so right about that.
I'm
Mm,
telling you, when it's already popping off now. So
yeah. ICT concepts. What's your opinion? You're the expert on oil. You're the only person I know
I
that
mean,
trades.
I wouldn't say I'm the expert, but I definitely trade it, and it definitely lives on my balance sheet. Can you hear me all right?
Yeah, yeah, I can hear you.
Yeah, I mean, we range a lot between 73. 73 is a pretty consistent price for oil. I mean, if you look at one of the number one inflationary markers within local economies, gas prices are always a thing, right?
Yeah,
So I don't think that oil is going to be super uber extra dramatic. I see a lot of gaps that we can fill. I'm bullish on a lot of those gaps, but within
yeah,
the election year, we're dealing with a commodity that kind of defines inflation, right?
that's
At
correct. Yeah,
least within households, people are going to really get upset the more and more and more they have to pay for gas.
yeah,
So oil is very much going to be, I think, a geopolitical kind of asset that could be utilized within an election year. But
yeah,
I believe it's going to continue ranging. If you want to know the truth, I mean,
yeah, yeah.
it's not a huge surprise that we see oil between 81 and $72. That
Oh,
$9 range is what we essentially live in, and that's what I trade. I'm willing to trade intraday, and I'm willing to live in that 78 price. A lot of the gaps. I mean, oil's got a lot of gaps, so we just live in those, man. So quite honestly, it's not really a secret. It's just a very
sorry.
ranging market and very consistent.
On the futures market in oil, do they do the month by month contract? They don't do like indexes 3 months out, right?
No,
Or
they're month by month. They are. What's
okay,
really nice about oil is, um, what's really nice about oil is where and how it plays to like its historic average. Like it's
okay,
constantly reverting back to a mean. So you're
okay,
going to go within a month or a monthly projection, and then you're going to revert back to its mean. So we max out either the bullish or the bearish side. So we're kind of looking at it from the monthly and the weekly levels, and then we're just trying to play institutionally. What's beautiful, and I want folks to understand this, the same way ICT has taught like the 20, the 80, and the 60 within institutional levels, oil trades within a 25-cent range. So
damn,
you can constantly find, you can put the quarters on there with it being a dollar. So you can play 76, 76.25, 76.50, 76.75, 77, for example. If you're
that's good.
just utilizing quarters on an asset like oil, you'll find that they work very well from an institutional level. So you can constantly find at least the 25-cent, 50-cent, or 75-cent trade. And that's typically all I'm looking for, Yusuf.
That's good, bro. I never knew that, bro. I'm trying to diversify away
Oil
from.
is one of the easiest things to trade, I believe, because you can look at the MCL contract at $1 a tick. You can look at the CL contract at $10 a tick, and you can look at a tick value as being 1 cent within your incremental price deviation or range of $1.
It's crazy,
So
man. It's good.
understanding that dollar price range, it isn't a 7-digit asset like something like an index, and it is
Mm,
constantly ranging, so you get clear
mm,
and clean algorithmic price delivery,
nice.
and it makes your ability to trade within these institutional levels, in my opinion, very attainable, especially for newer traders.
Nice,
So
yeah. Thank you, bro. Much appreciated, bro. Hefe, any last questions? Sorry, I cut you off earlier. Sorry, you're saying?
No. I always speak about commodities with you, and I love your macroeconomic reports and just the fundamental analysis and how it plays into what we do over here, as far as
I am
what we do
into
with
soybeans, bro.
commodities.
I want to start researching soybeans myself, bro, because I'm
Yeah,
trying to
soybeans.
diversify,
I'm
bro.
telling you, bro.
Yeah. Mm.
Soybeans and soybean oil. So
Exactly, yeah. Larry Williams made the distinction between the two, and he goes between either one sometimes, But
yeah.
he called that drop earlier in the year, earlier on soybeans perfectly. I don't even know how he does it, but
Yeah. Oh, also, I want to tell you, that gentleman that you introduced me to, Jason Superior,
yeah,
he's really good as well with the crowded
yeah,
marketplace. He is really, really good as well, and he
but
kind of trades in a D. He said like a decorrelated sense from the CTA
yeah,
advisory. So that's
yeah.
yeah. What he has going on over there is we're
He
trying to
was
incorporate
he
what he
was on
has as
Market
well.
Wizards. Many people don't. He was actually on Market Wizards. He was interviewed on Market Wizards. But I learned the short squeeze and the long squeeze from him. When a market becomes too crowded, what to look for and things like that. Do you get it?
Exactly. Yeah.
Yeah.
But yeah, that's pretty much all I got, man. I'm looking forward to a amazing fourth quarter as well. We've been doing pretty
Guys,
well.
I would advise everyone take advantage of the next few months. It's gonna be crazy. Lots of opportunities for everyone and lots of money to be made. But don't be surprised. In all markets, we're gonna see new levels in forex, new levels in indexes,
Oh yeah.
and many opportunities. We're going to see the easing cycle has begun. I've never seen Jerome Powell so dovish like he did declaring victory that when he was speaking on Friday. The guy was actually smiling for once. But yeah. So that's we will do. We'll do another space at the end of September and see where we are just to catch up on indexes. Thank you, everyone. Let me just mute his mic. Sorry. Thank you, ICT Concepts, for dropping in late, and thank you, Zay, for co-hosting. I will be on Zay's YouTube page next week Sunday on his one, and to discuss things more in detail on his side. So what we always try to do is we give some half, we say half things here, and then we give more half the more important things the other half we give it to his channel, on his channel, you know. So if you can follow him on YouTube, he's a YouTuber on Sativa Sundays, it's called, right?
Yes,
Uh,
sir.
yeah, if you can follow his page, and I'll see you guys. I'll see you guys on there. Thank you all for coming, and the call is recorded, so you can all listen back to it. Thank you guys. Bye bye. Take care. Thank you, everyone. Bye bye.
Appreciate it, my guy.